Federal Reserve has been raising interest rates for the last year. That bank collapse is something we've been talking about a lot, Savannah.
Yeah, and that has a big impact on what we just saw with the Silicon Valley Bank and its failure. We've got Cheung from CNBC right here. So let's talk about what happened yesterday over the weekend. This bank in Silicon Valley collapsed. Another bank in New York on Sunday, same thing. Now the federal government has stepped in and said, we will shore up deposits. If you had money at these banks, don't you worry. Even if it's over $250,000, we got you. How did that remedy affect the markets? Do we feel like the fever has broken and we're on safer footing now?
Yeah, well, the stock market yesterday closed mixed, so it seems like it stopped the bleeding that we saw at the end of last week, but it hasn't necessarily taken away all of the concern banking industry wide. In fact, just last night we saw Moody's, one of the big ratings agencies, put on review for downgrades 6 other regional banks. So there's still the concern out there that perhaps this could spread to other banks, although we're not seeing the same types of liquidity issues that we saw at the Silicon Valley Bank yet. It's important to remember for every average American that's watching this story that the banks that went under last week are not the banks that we keep our money at. It's very different.
They're not mom and pop.
They're not mom and pop. They're taking deposits from large businesses, right? Small businesses as well, but essentially they're all business accounts, specifically in the tech sector and also in the crypto sector. That's not where you and I have our savings accounts. Those banks that are consumer facing largely appear to be okay for right now. But again, a lot of concern right now out there. Investors, average Americans are very jittery right now. But again, deposit insurance covers up to $250,000 per depositor. That has not changed at all.
All right. And the government has stepped in to try to send that signal that we're not going to let the banking system fail. So let's talk about how this all started, because I think there's a certain fundamental understanding of banks that we all kind of have to have. You think you put your money in the bank and then it sits with a little box and it's got your name on it and that's your money and it's protected. In fact, that's not how banking works. They take that money, buy, sell, trade, securitize, move it around, because they know that unless everyone comes in at one time trying to pull out all their money, you will be able to get your money back. That's the run on the bank is what happened to Silicon Valley Bank.
Exactly. And for the record, what makes this different than 2008 is that after 2008, there were more regulations put in place under Dodd-Frank to increase the amount of money that banks need to have ready and available and liquid if a large amount of depositors were to come at one time to pull money out. That doesn't change the fact, though, that since 2008, even post-crisis regulations, that banks are doing other things with the money that's being deposited with them that average depositors aren't aware of. But essentially, those regulations have made it stronger in terms of how much capital and liquidity the banks have available at hand after any sort of event like perhaps the beginnings of a bank run. But it's never going to be 100%, which has raised concerns on Capitol Hill. Do they need to maybe even revisit some of those rules after what we saw over the past few days? Again, it's a bit early to say exactly what's going to happen, but it's a good reminder for Americans out there that when you put your money into a bank, it's not, as you mentioned, just sitting in a box. But again, that doesn't necessarily mean it's not safe because of that deposit insurance up to $250,000 per deposit.
All right, Brian, thank you very much. We'll have a lot more in our next half hour. We got some answers to some of your top questions that you sent in, concerns about making sure that money is safe.
Hey, thanks for watching. Don't miss the Today Show every weekday at 11 a.m. Eastern, 8 Pacific on our streaming channel, Today All Day. To watch, head to today.com/allday or click the link right here.